on the cards, but that's the exclusive that we're picking up on Nalco, a 5% divestment within the next 15 days or so. But let's move right on and get an Urmil Shah, research analyst at IDBI Capital Markets then, to talk a little bit about the growth outlook for the IT sector, the kind of buybacks we have lined up and what the prospects are. Urmil, you're expecting TCS to announce that buyback of 2.9%. Would this be enough to drive earnings higher in an elusive revenue growth environment?
Yeah, so we are expecting them to announce a buyback of about $2 billion. So if the buyback is higher than that, then yes, that would be a slight positive. But overall, if you see, even at $2 billion, the buyback would be at about, less than 3% of the shares outstanding. So it will have a positive impact to that extent on the earnings. So unless and until the buyback is significantly higher than $2 billion, which we expect, we do not see a big upside on the stock.
Now, you mentioned that M&As should be first priority, but IT companies' track record has not been that great, and considering that they are chasing new technologies which might be available at premium but will still leave enough for these companies to really cater to structured buyback?
So if you see, all the 5 large cap companies, the cash on books is at least about 9% of their market cap, and for some companies it's even more than that. So to that extent, I think the cash available to them is good enough. Your point is right that not all of the companies have been aggressive on M&A, but what you said, that is also what I would second, that they will be looking out at M&A only in the new technologies, the digital technologies, and those are gonna be at a higher multiple, or they would require good investment upfront. So these deals would take time, but I think that FY18 should be a period where we should see these companies chalking out M&A to improve their digital footprint.
And Urmil, after Cognizant, now TCS, we understand Infosys as well. Do you think it further increases pressure on Infosys as well for a buyback or a one-time dividend?
So I do see a probability that there can be a buyback coming in FY18, as I mentioned earlier, but I don't think any of these companies would announce it because of the pressure for any of their peers, because each of these companies will have their own capital deployment strategy. But yes, as we discussed earlier, in FY18, we believe that after M&A, buyback remains a high probability for these companies.
Okay, and Urmil, now IT sector valuations are close to 3-year low levels. A higher capital return policy can trigger a multiple re-rating, you think?
It would have been a scenario had there not been, headwinds, mainly two. One is, the IT spend isn't picking up in a big way on an overall basis. So the growth for these companies, are between 8 to 12%, I would say, for next year. And secondly, still there is no clarity on what is the kind of impact on the margins they might have because of the adverse visa rules in the US. So once these headwinds actually ease, I would say starting off with the visa rules in the US, then yes, there is a probability of high probability of re-rating in the stocks.
All right, thank you, Urmil, for joining in, giving us your views and expertise on the IT space and the recent news of buybacks that have been coming in. But let's move right